Here we have the current stock market analysis for GameStop Corporation, stock ticker GME. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So here we have the 1 hour price chart. Each candle on this price chart represents a 1 hour trading period. And we can see that share prices are making an attempt to build a recovery here from the lows that were generated right near $19.31. So this has been obviously a substantial movement lower. We have seen significant price gaps in the process. And then in addition to that, we're also starting to see evidence that a false breakout occurred above the $25 mark. So when you start to see breaks of resistance like this to the top side, and this is what we saw here previously, the prior high came in at $24.69, and then this near-term high came in at $25.01. I should probably mark this on the price chart here. $25.01. So as we can see here, the share price itself did manage to post some higher highs here. So we do need to go over this price chart and outline some specific price zones here because we do need to identify where and when it would be possible for the stock to start to stage some sort of recovery. The destruction in share prices to the downside has been massive at this point. We're coming in right into another period of time where many people on this platform were saying that we were going to the moon and the short squeeze was coming and all this. We did see a series of wave movements higher here, but ultimately what unfolded there for people that are actual experts in technical analysis would be, evidence that a harmonic pattern did start to unfold right at this level, and that this breakout above the $25 mark was not actually sustainable. So the price wave that followed here could have been seen in advance. And the share price gap that has unfolded now to the downside is quite ominous. And the real question here is, what will it take for share prices to start to, build a recovery here and possibly fill this price gap? So currently, what we're looking at here would be the bottom of the price gap coming in right around $21 per share. At the time I'm recording this, we're trading at $20.84. Of course, we're coming into the Friday close here, so this will be a weekly close at this point. This is going to be a fairly critical close here because if we fail to close above that $21 mark, it will be significant because there is still then a possibility that this price gap does not get filled. The way that a price gap would need to be filled, the way for this to occur would be for share prices to start to enter back into this price region. The reason price gaps are filled is because there's a huge number of orders. The market's a big place. There are buy and sell orders on both sides of the market all the time. And presumably, even with a stock like GameStop, there are going to be orders that are parked here throughout this region that will ultimately need to be filled at some point. However, if share prices never venture back into that territory, or at least don't do it anytime soon, the likelihood that those orders are actually filled starts to diminish. So ideally, what you would like to see here would be a weekly close above this $21 level. If we could start to see some price movement in that direction, then you can start to bank on the possibility that this total price gap would be filled. If that were to occur, you'd be looking at share prices moving back into the 2320 zone, which does not look as bad as share prices trading, in the lower 19s or something like that. So, the weekly close here is going to be pretty important because it's going to sort of determine the outlook for the next week. If we are able to break above $21, it's possible then that you could see a fresh wave of upside momentum, sort of some free momentum that would be generated by this share price gap that did occur to the downside. But as things currently stand, what you have here is a resistance zone, a historical resistance zone that's coming right into contact with this area. And then in addition to that, this is the hourly price chart. So you've got this declining yellow line here. That would be the 20-hour exponential moving average. So these are sort of coinciding here pretty closely at the moment. So you do need to overcome this level. If you're able to overcome that level, you break the historical resistance zone. You're managing to trade back inside of the exponential moving average cluster, and then you have the possibility that this price gap starts to be filled to the top side. But if we see a weekly close below this area, and lack of share price movement here into the end of the week, there is then nothing to suggest that share prices will have the ability to generate the momentum that would be required then to fill this price gap. So we're actually trading at fairly critical levels at the moment here, and it is going to be important for share prices to sort of to make an entrance here back into this exponential moving average cluster, because at least that starts to take pressure off of the downside. Of course, this pressure to the downside was largely created by this break of prior support, which came in at $19.88. So the way things currently stand, you have to remain focused on the downside until you start to see some evidence that share price movement is starting to move in the positive direction. If we look at the indicator reading here, the recent upside price movement has clearly broken to the downside. You did see share prices start to bounce out of oversold territory, and then in addition to that, you can make the argument here that there is a bit of a bullish divergence here that is starting to form at these levels, because share prices did move into new lows at 1931, which was a lower low than the 1988. But what we're seeing here is a positive indicator signal here, because the indicator itself did not form lower lows on its own. So if the indicator is failing to confirm these lower price levels, you do have a bit of a positive argument that can be made there, because the indicator reading is not confirming these lows. So the way things currently stand, the main level to watch, in my opinion, is this $21 level. If you're able to break above there, you do have some resistance that would be expected right around this 2166 prior low. You have to remember prior areas of support turn into resistance when they're tested from the downside. And then in addition to that, you do have this declining 50 period exponential moving average. So that's the 50-hour exponential moving average on this time frame. So those are both coinciding with roughly the same area here. It's possible that you could start to see some resistance into 2166, but I am looking mostly at this $21 level at the moment, because I do think that if you are able to break above here and see a close above that area, then the argument for some sort of free momentum, let's call it, to the top side, could start to be generated based on the fact that there is a massive price gap here that could start to be filled if we enter back into that region. So here's the current stock market update for GameStop Corporation, stock ticker GME. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market, lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership, and start trading stocks with the pros.